we have the current stock market update for MicroStrategy Incorporated, stock ticker MSTR. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders can find this information more easily on the platform. So here we have a 4-hour price chart. Each candle on this time frame represents a 4-hour trading period. And as we can see, we are starting to move toward new lows after posting those longer term major price highs coming in at 227.15. So overall, this major trend wave movement that we were looking at in the prior video, all of this remains intact. The main price movement that I'm watching here comes from the 114.27 lows and then extends to those 227 highs. And at the moment, what we can see here is that the share price has broken through this prior support zone that we were watching previously, which came in right around 201.40. So now we have convincingly broken through this 23.6% Fibonacci support zone. And we're now looking for a test of roughly, this would come in at roughly 183.60 to 183.90. This is a bit of a support range that we've been watching for this stock, because really what we're looking at here, in addition to this 38.2% fib retracement, which does come in right around 183.60, but it's a bit of a rough estimate here because we're also looking at what was previously a triple top resistance zone. At least a triple top. I mean, this could even be, you could even argue that this is a quadruple top, or this might even be 5 tests if you want to split these up a bit more. So, this isn't really an exact price zone at the moment, but there is a lot that's sort of converging right around this 183.60 to 183.90 area here. So that would be roughly this sort of this zone here. So I'll just quickly summarize, why we're looking at this level so closely. So, here we can see that it's been tested on several occasions, and this really was sort of the major breakout point that gave the stock its rocket fuel to move into 227. We're seeing that this movement back lower now. This area is the 38.2% fib retracement. It's a prior area of resistance that has now worked as support. If we can see here, we can see that share prices break through this level and then retest it from the top side, and then ultimately launch into that 227 level. So it's a major level of resistance that turned into a major level of support. It's also a 38.2% Fibonacci retracement level, and we're starting to see a situation where the 50 period exponential moving average is likely to start to move into this area quite soon. So you have several pieces of evidence here pointing to the same direction, and it's a little bit of a rough estimate here. It's not exact because these historical resistance zones were not exact either. I mean, these were not the exact same levels. This was sort of a rough area, 183.80. So it might seem like this is a bit messy here, but this is really the zone of support that we're watching. And the recent price low now. Let's get an exact number here. How close did we get? So we came into 185.81 is sort of the new near-term low. So we didn't quite breach that 183 area just yet. We've gotten close to there. So, I do think that that's a major area to be watching here because, one of two things can happen. Either you see share prices find support in that area, and then you can start to see this possible new price movement above those prior 227 highs, those all-time highs. Or, conversely, you see share prices break below there, and now you've got more of a problem because now this could set up a situation where losses start to accelerate. We could see how much of this price move is given back, how much of it is retraced. And if this were to happen, if we lose that 38.2% fib level, I would then be watching roughly 156.80 to the downside. So maybe I should even put that in here. The reason that I point out this level specifically is because, we have actually had to readjust this area here. So the reason that I point to this area specifically is that this is the 61.8% Fibonacci retracement zone. And it's also going to be an area very soon where the 200 period exponential moving average rises into. So as we can see this blue line here, is ready to start to move into this area as well. And it would take some time. If we did see a share price movement lower, it would take some time for the stock to reach that point. And then by the time the price got there, this moving average would probably be there as well. So this is the reason that we would point to these areas specifically. As far as upside price targets, it becomes harder to get exact price levels. There are a couple of things, there are a couple of strategies that we can use to sort of develop some price levels, such as standard deviation channels or Fibonacci projection zones. I don't like to get into those too heavily because I don't know. I have less of a problem with the standard deviation channel. I think that makes a lot more sense than the Fibonacci projection zones because that's just one number, and I typically only use Fibonacci levels in conjunction with other levels. For example, a moving average or an area of historical support or resistance. But if you're dealing with all-time highs, if we moved into 230 or something like that, there's nothing going on up here. There is no historical support and resistance. There are no moving averages, and that's because the stock has never been here before. So it's a little bit less exact, and I try not to go too far off the rails as far as like making projections that may or may not be correct. So I like to be more exact than that. So for the most part, these are currently the levels that I'm watching right now. I would wait for a bit more of a decline before considering any sort of long position here. We can take a quick look at the indicator reading just before I close the video. And we can see that, there is some conflicting momentum signal activity that's going on here. But the longer term trend is slightly more important than the shorter term bearish trend. So as we can see here, this uptrend line here is slightly longer term than this negative bearish trend here. It's also been tested on more occasions. So this does make it slightly more valid. So we can say that on balance, the indicator reading is more negative, more positive than negative, but not by much. It's somewhat conflicting and somewhat neutral. So there really isn't much that we can derive from that. So at the moment, I would be waiting for, at the very least, a test of roughly 183.60 to 80. And then we really do need to see what happens there because that's sort of going to be a major inflection point. And it will determine whether or not the stock is going to bounce to new all-time highs here, or if we're going to see a deeper retracement lower. So here's the current market update from MicroStrategy, stock ticker MSTR. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.